Well, all eyes, of course, would be on how Q1 FY22 GDP shapes up. This is the GDP for the quarter April to June 2021, wherein we did see huge amount of impact on account of the COVID second wave. A large part of the entire quarter was impacted on account of second wave. Rural economy was sharply impacted. It is only since from the month of June did we see the impact of COVID second wave receding and some recovery in fact taking place. In fact, economists across the board do have estimate anywhere between 19 to 21% for Q1 GDP. It's likely GDP is likely to be in high double digits, A, on account of a favorable base, and B, on account of that the industry sector definitely is likely to support the GDP. The corporate results the corporate performance during Q1 has definitely been fairly resilient, and also the services sector, which is the contact sensitive sector, therein the impact of the COVID second wave was relatively lower than expected. Of course, the entire agriculture sector, the rural economy, would be keenly watched out for, as COVID second wave did impact this section of the economy fairly severely. Q1 GDP may also be slightly supported by government spending, but private capex is yet to pick up, at least in Q1, and our conversations with a lot of bankers and corporates to suggest that private capex is only slowly picking up in select sectors, but there are definitely positive indicators as of now in terms of the pickup in private sectors. The high frequency indicators also are showing fairly good signs of pickup. For instance, the GST collections have been fairly good, about 1 lakh crore for most part. For a majority of the months, e-way bills are suggesting an uptake. Manufacturing PMI has rebounded, power consumption is rising. There's also rise in vehicle registrations, and exports also are showing signs of pickup. In fact, RBI estimates the Q1 GDP to be around 21.4%. Barclays has an estimate of 21.2%. State Bank of India sees Q1 GDP at 18.5% with an upward bias, and Deutsche Bank estimates the GDP at 23%. For FY22, RBI sees the GDP at 9.5%, but a lot of the economists do believe that if at all, while the risk of rather the COVID second wave is certainly there, if at all this risk does not materialize in a very severe manner, and there are surely signs of pickup in terms of the economic revival, then there is a possibility of upside risk to the overall FY22 GDP estimate of RBI of 9.5%. In fact, Barclays stated that the entire GDP it will be a clash of two contrasting themes. Although the sequential momentum has definitely slowed down, the robust performance of India's tradable sector and a smaller than expected decline in the services activity should be supporting the GDP. State Bank of India stated that the ultra high frequency indicators, for instance the RTO collection, electricity consumption, along with mobility indicators, all are showing signs of pickup in terms of the economic activity. And also Deutsche Bank sees the GDP at nearly around 23%. They see the industrial GVA rising to 55% YOY, and also they're seeing a pickup in terms of the services GDP, which is nearly around 16.5%, and a 2% YOY increase in the farm sector, which should lead to an overall growth of 21.5% in terms of the real GVA for FY21.